Hi everyone, I'm Nova Lui, Head of Investor Advisory at RHB Bank. Welcome to our monthly Investment Insight podcast, your simple, practical recap of the big move shaping equity and bond market this month. US equity market continues to hit record highs with AI deal making and rate cut lifted sentiment. The Fed cut rates in September and projected 2 more quarter points cuts this year, keeping soft landing hopes alive. Fed Chairman Jerome Powell openly commented that weaker economic data such as slowing labor market prompted the rate cut further strengthen market belief that there would be another 2 rounds of rate cut by end of 2025. The US Supreme Court has yet issued a decision regarding the legality of his sweeping global tariff. The court has scheduled oral argument for early November 2025 and is fast-tracking the case due to its wide economic implication and lower court ruling that previously found the tariff to be unauthorized and unconstitutional. The tariff will remain in effect while the Supreme Court deliberates, and the final decision is expected later in the year. Trade and legal experts see up to 80% odds that Supreme Court will rule against global tariff. A US government shutdown that began on October 1st is still ongoing, causing delay in data releases and ongoing policy uncertainty. The shutdown resulted from a failure of Republicans and Democrats to agree on a funding bill for federal government service beyond September. Despite concern, the US equity market has not experienced significant negative impact during this shutdown. This is the third government shutdown in the past 10 years, and equity market has historically rebounded a few months after each previous shutdown. Hong Kong and China stocks were down before investors away for the long Golden Week holiday. However, China's stock edged higher when mainland market reopened after the Golden Week break as investors wrote renewed optimism around AI-related shares, even as the holiday data signaled weak consumptions. Over the past month, Hong Kong tech stocks have rallied. The Hang Seng Tech Index is up roughly 12 to 13% as AI optimism lifted heavyweight names. Sentiment was boosted by NVIDIA CEO Jensen Huang's remark that China is only nanoseconds behind the US in chip, implying the mainland rapid progress and competitive intensify, and by Alibaba's unveiling its Qwen 3 Max model alongside a broader NVIDIA partnership and new global data center plans. India equity market shown some recovery in early October, with benchmark edging higher on IT strength, while a busy year-end IPO pipeline underpinned risk appetite. However, a key overhang is US policy risk, where most notably 100% tariff, which has India's pharmaceutical exporters on edge and could weigh on sentiment if implemented. Japan's Prime Minister Shigeru Ishiba resigned in early September 2025. Since then, Japan's equity have surged. The Nikkei 225 and Topix hit record highs in late September and early October, as Sanae Takaichi's win in the LDP's leadership race stoked expectations of pro-growth fiscal stimulus, while a weaker yen boosted exporters and market has trimmed the near-term BOJ's tightening bets. Japan's central bank has finally mapped out a very gradual unwind of its ETF hold, saying on September 19 it will start selling roughly 330 billion yen a year, proportionally across holdings and spread over time, at a pace that could take more than a century to fully dispose, by design to avoid market shock. For equities, that clarity reduces the long-standing overhang risk, while the ultra-slow cadence should keep the near-term price impact modest. Over the long run, a steady transfer of ETF back to private investor can improve market efficiency, free float, and better governance. Malaysia equities have been gaining traction into early October as investors position for Budget 2026, which will be tabled on 10 October in Parliament. Recent session shows that FBM KLCI edging higher with signals of foreign net buying, while local strategists flag spillover interest in tech and policy-linked sectors. Gold has ripped to fresh records in early October, topping 4,000 US dollar per ounce for the first time, capping a powerful multi-year climb. The move has been driven by safe haven demand around US government shutdown and broader geopolitical risks, rate cut expectation that pull the dollar and real yield lower, and ongoing central bank and ETF buying that tightens the market balance. Volatility continues to elevate in the current market environment. If allocating new investment, it's wise to size position modestly and consider dollar cost averaging. Thank you again for joining us today. If you notice that today's sharing prompt a need for portfolio review, feel free to connect with your RHB relationship manager. They are ready to help you to rebalance across cash, bond, equities, and alternative, and make sure your investment strategies stay on course. See you again in our next podcast series.